All right, traders, welcome to today's market recap. This is Christian from Hertz Tribeca Trade Group, and it is Thursday, December 15th. Another big central bank meeting drove some of the price action, I believe, today, but probably a combination of factors at this point. Risk disclaimer in front of you. Everything that we're going through is for information purposes only. Please go ahead and read the full risk disclaimer here. So let's first of all, on a day like this, we'll start with what the averages did for the day. SPY was down 2.4%. The Qs were down, finished down 3.4%. IWM was also deep in the red, down 2.5%. The Dow Diamonds finished down 2.2%. Gold, you couldn't really hide out there. That was down 1.6%. Gold miners really got hit hard. Silver, which has been showing relative strength, also got hit pretty hard. That was down 3.4%. The VIX was up, did not close on the highest levels of the day, which were, close to 24. Didn't quite get there, but the VIX was finished up 8% for the day. So before we get into sectors, which you can see there were not a lot of bright spots there either. Let's go over the indices and just kind of wrap our head around today's price action, which again, very fast. It's been a little while, I think, since we've seen one of these big volatile days to the downside. That's what this year has been kind of plagued by, is that we've certainly seen these bouts of volatility, and today just seemed familiar to what we experienced. I think the worst red day, I mean, this was a nasty day back on the 2nd of November, but this was what I'm kind of referring to, 9/13, that was September 13th, 8/26. There's another one of these big red days, and things can come undone rather quickly, right? When this market decides to kind of make a decision to go in a particular direction, which this year, while we have seen several of these bear market rallies and got close to kind of turning the corner, but we're decently back below the 200-day moving average after today's price action. And now you kind of look at what's transpired over the last couple of days, and it's a pretty decent fake out, and that's not easy to manage. It's not easy to manage when you've got several positions on. Also, this week is always very difficult in terms of when you've got all the events wrapped up like this into 1 week. Heavily watched CPI report, the Fed meeting yesterday, and today, you had the ECB, which was extremely hawkish. I thought much different than what the US Fed said yesterday. They are acting like they're going to raise interest rates no matter what, and stand ready to do that. They raised interest rates by 50 basis points, but there was also some dissent there. Some of them wanted to do 75 basis points. So of course, if you keep getting impacted by news like this, and when you're in a situation that we're in, rising interest rates in a bear market, there's not a lot of support there, and it doesn't seem to be like there's a lot of liquidity when that goes on. So let's separate all the headlines and so forth, and let's concentrate on the price action, because if you're truly a technical person, the price action is telling you a lot, rather than try to figure out this headline or that headline. But basically, of course, 2 days ago and yesterday, coming back up to the 200-day moving average, a lot of tests of the 200-day moving average, retest, big rejection, obviously the day of the CPI report, and a little rejection there yesterday. And then today was just basically, there wasn't any, I don't want to say support for the market, but there just wasn't any interest on the long side. This is what we were doing pre-market. And once we kind of came in, there was just it was basically kind of a straight day down, until about, until we got to this afternoon. And then we caught a little bit of a bounce, but there really just wasn't too much to it, right? And you know, a couple things that I noticed, of course, when we have this type of price action right from the start, you know, pre-market and so on and so forth, is that we just couldn't really get above these moving averages. You know, a little bit of a test here. We continue to go down. We went sideways here for about an hour around 1 o'clock and had a little bit of a fight back. But again, it's you just don't have that that strength, that gusto in the market to kind of you know, retake some levels. Another thing that I always notice too in the market, you know, where the market was and what market breadth was telling you, which was heavily to the which was what I referred to as nasty, right? You know, heavy volume with the decliners today, and that's what makes it also very difficult. Even when the market begins to bounce back, right, you could see that the breadth really didn't change that much, right? And that was something that I relayed in the trading room. I was like, well, you know, and I tried a little bit of a bounce trade at the end of the day, and I just didn't see that the breadth was materializing, you know, improving. So that's kind of the story. So where does this leave us? You know, it leaves us with the 80% rule is in effect. Remember, this was the 80% rule was something that I talked about towards the end of last week, right? If you're not familiar with what the 80% rule, it is when you, first of all, you could Google that, right? So if you Google 80% rule using value areas, you'll get a definition, but I will give it to you. It's when you start the period either above or below the value area for the month, and you establish yourself inside, there's an 80% chance that you're going to go from one side of the value area to the other. So you can see on the top left of our screen, it says bearish 80% rule. Now, of course, if you get outside of value, then that rule goes away. And we did not get a closing. We actually never got a closing bar back above the value area. Like intraday, it looked like it was going to be different. But you know, so what I said, remember, if you've been watching my videos, I said last week, you know, and we measured this. We said, you know, how far do we have to go down? Which I think this was Friday's, right? Yeah, here's Friday's candle. And I think I measured it, it was like 2.7% to the downside. So we're about halfway there to the downside, right? And that would kind of shake things up a bit, right? And you have to remember, and you know, I think if you're on Twitter, like you hear somebody talking about the Santa Claus rally. Santa Claus rally is not this week. It is it is the following week. So I tweeted this out last week. Right. And this was last year. And again, you know, it's important to realize that, you know, this doesn't mean that this is going to happen the same way, right? Just because this is what happened last year doesn't mean that it's going to happen this year. But last year, quadruple witching in December was very weak too, right? You could see the price action of what happened, right? You also had a rejection, right? You had price try to get above this value area, got rejected, right? And then you had a hammer bar, and you know, so that would be something to maybe look for tomorrow, right? Is to see us go lower and then, you know, maybe come back, right? And have some type of a hammer bar, right? And then maybe we can build off of that for next week, right? And that's where the Santa Claus rally would come into effect. Now, I know some people are saying, well, Santa Claus rallies, they don't happen in bear markets. Okay, that's fair. But still the seasonality, regardless, to take into account of bear market or bull market, it is a stronger seasonal week. However, right, seasonality is just one piece of the puzzle, right? There's a lot going on. Last year, we were not in a tightening cycle. So, you know, keep that in mind. All right. And then of course, look what happened thereafter. Right. So again, to me, like this Santa Claus rally type stuff is really gets overplayed because it is just 1 week. Right. And then you could kind of see what happened thereafter. Right. So again, I'm not saying that happens either. Right. But I'm just saying that we made a similar move last week when everybody's talking about, you know, showing funny pictures of Santa Claus and so forth. Listen, that's fine. to make fun and have some fun, I guess, joking around, but it's just not that. It's the Santa Claus rally is not this week. All right. So so we're following so far the pattern. Let's see what happens tomorrow, which again brings up tomorrow quadruple witching. Anything could happen on quadruple witching. Remember a couple things. I always talk about this every quarter. I spend about a minute and a half. I'll try to keep it the same, but what you will see tomorrow is one of the expirations tomorrow is futures expiration. Right. These are the December. Now, most people, if they're trading futures, they've already rolled their futures and they're on to the March contract. But the December contract doesn't actually close out until tomorrow. When does it close out? On the open, right? So you will have what's called SQ, right? That's called special quotation, is the price of where the futures go out tomorrow. And how do you compute that? That is based on the opening basket of the S&P 500, right? Which is, talking about S&P futures, right? But NASDAQ futures also expire on the open as well. But it's based on the computation of the price of the basket that these indices track. So for S&P, it's 500 names. For NASDAQ, it's the 100 names in the NASDAQ 100. Now, so you will see this big volume on the open. All of that because that expiration is tied to what's called MOO, market on open, right? Different than market on close. So you will see a lot of volume on the open, right? And then of course, towards the close, you have regular things like monthly option expiration, but you also have the S&P and the NASDAQ rebalancing, which is benchmarked to tomorrow's close. So you have the potential to see a very big volume day tomorrow, all right? I always get questions. Well, what do I think is going to happen for quadruple witching? I have no idea. I'm not privy to the information about how these rebalances are going to, if there's a funding trade involved, meaning all of the components that are getting rebalanced, sometimes they don't add to perfectly one. And then what happens is there's a funding trade, which means that the basket has to get bought or sold. And I don't have that information. So plus you have to know what's going on for option expiration too. So the moral of this, in my opinion, is just watch out. Basically, that's the trade, right? If you're not given any of that information, then you really try to get out of the way. One of the one trade that is interesting, because index rebalancing is a one-time deal, the event will be over tomorrow. So if you see some things like really get stretched to the downside or rally hard, unnecessarily no news just because of the index rebalance, you may be able to kind of take the other side of that, right? You could short that strength or buy that weakness, right? As long as it's not every name, but we're talking about names that kind of spike into the close or sell off hard in the last 15 minutes. That's the only way to kind of that I would think about trading for the event, is just realizing that things might get stretched because of all the volume that will be associated with the close. All right, so I think I spent a little bit more than a minute and a half explaining it, but there you go. And so here's where we are. S&P, also the 50-day moving average might act as some support. Remember, 80% is not 100%, but that's where I think that we could be going down to, is 38.57. Right, 1 hour, we had no problem breaking through the value area today, right? We actually went right through that. So support, there wasn't any major support there. Notice this 38.51 on the downside is going to line up very closely with the bottom of value on the daily chart. NASDAQ, or if you want to look at the Qs, we can look at the Qs. The 50-day moving average was something that was just hanging below. The 80% rule is in effect here as well. So 273.63 is a support level that you want to watch, right? And we did break the 50-day moving average to the downside. How about IWM? Right, this has been a trouble spot, I think, for the last couple of weeks. Right, you could see that this is now broken below. This is back below all the moving averages. So again, this is confirming that there's a lot of weakness going on, right? Small caps are something that I like to see lead, to the when we have a rally. I like to see small caps kind of lead to the upside. It shows me that there's some good strength under the hood. And right now we're seeing this lead to the downside. 173 could be where this is headed. But again, on my charts, right, 200-day moving average, 50-day moving average, 20 and the 5, this is below all of them, right? So does not look very good, all right, from a technical picture. Bonds were rallying today, and I think that at this point they're kind of acting as a little bit of a flight to safety, even though they really haven't had major momentum. They've been kind of chopping back and forth. They were a non-issue yesterday during yesterday's Fed, and just as I said in yesterday's video, I think it goes to 132.27 for the 30-year bond future. UUP or the dollar, this was a trouble spot today. This was also, I think, as kind of a risk off, like flight to safety as well. Now, this did not get back above the 200-day moving average, so that's at least one positive, but I would be wary of this if it does get back above the 200. For now, for today, it didn't do it. All right, a couple things that a couple other notes that I noticed for the day. And first of all, we'll go into sectors a little bit. Odd to see the home builders, they actually led today. You would think that's kind of one of the trouble spot, but maybe that move in bonds is helping them. Plus, Lennar had a nice reversal. It's funny because I tweeted this out that Lennar went red to green, and I get people telling me, I'm not buying this. I'm like, I'm not saying to buy it. I'm just kind of giving you the sense wow, that's kind of unusual, right? I didn't trade this thing, and I'm not going to buy a home builders. And I think that the sentiment is very bad in the home builders, and I think that's there. That makes sense. I don't think that they should be a trade here too. I think it's going to be a very difficult environment. So, if this group goes up, so be it. But I don't have much exposure to it. There's what the ITB home construction ETF looks like. The other area too, which I think is interesting, is the energy stocks, because they are still a cheap bunch of stocks. However, I would really like to see crude. And if you've been watching my videos, you know that I have not really been participating in many of the energy stocks. In fact, I reduced them, out of my one of my portfolios a couple weeks ago because I didn't like the weakness that was going on in crude. And I still don't, this is testing the 20-day moving average. It's going to have to start taking out some of these lower highs at this point for something really interesting to go on in terms of energy stocks, right? I always will look at the underlying commodity first because I really don't want to go long energy stocks if the underlying commodities are weak, right? Now, nat gas, which has kind of just been all over the place, but in a range, but that's also in a downtrend below the 200-day moving average. So even, I was looking at some things like Antero Resources, which had a nice day, but it's still below the 200-day moving average. Now, Devon Energy is one that I'm adding to my watch list too. Attesting to that 200-day moving average, I would like to see it get back above. Same thing for an Oxy, right? That I think I would like to see it get back above the 200-day moving average, right? And the coal names, right? This was also a group that I was watching today. BTU was pretty strong all day long, and actually not a horrible looking chart. And then CEIX, which is also not a horrible looking chart. I had an alert set on this one, just never triggered, right? We're looking for a move over 72.55, right? So again, part of what this game is, and I gave the analogy yesterday of, a professional poker player who looks at a lot of hands, but doesn't play them, right? They fold a lot, right? So a lot of times it's just going through the motions, right? Until this market improves, right, and gets better. But until then, it's a lot of looking, right? Another name that I saw some people have a little bit of success with today is AEHR. I may try this trade tomorrow if there's some market strength, if the breadth is strong, right? It did get back into its value area for the week, so I would be watching 23. And again, maybe for a short-term trade. It does have some support here, but it looks a little bit it looks a little bit challenged. One other thing that I'll mention too, and again, I don't mean to make this this video really that negative, but also something that we have talked about, right, is that we have had one of these bearish crossovers, right? And this is not updated. I think I put this out yesterday, but right, here's what the NYSE looks like with the 10-day moving average, right? Bear crossover, right? Bear crossover for both of these, right? Remember, when this is expanding, when breadth is expanding, the wind is at your back. There's more advancing versus declining names. But just like here, right, here's the crossover here, and that lasted for a while. So we don't know if that's going to last long this time, but I think that you want to err on the side of, hey, you've got a bearish crossover, and we'll see if we'll see when it straightens itself around. But for now, it's giving you a good signal that things are weak. All right, guys, that's it for today's video. Have a great night. See you tomorrow.